Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 30th of March. Starting off with AIMO Minerals, where we're neatly between the 50 and 200-day moving averages, 200-day line around 1.95, 50-day line, which the stock just hit yesterday at 2.3 pence, rather conveniently, is resistance at the moment. End of day close through 2.3 hopefully would then open up the whole of the move up towards 4 pence, or the reverse the move from 4 and a quarter pence that we had back in January. Otherwise, probably more consolidation in the 1.8 to 2 pence area, which is neckline resistance up to the 200-day moving average. All the while, we've got that uptrend line, bullish divergence line in the RSI window, so that should tip the balance in favour of the bulls, rather, whatever the fundamentals regarding Russia-Ukraine may be. But that's the technicals at the moment. On to stock which is should be a winner in the current environment, the gas issues environment. Here we've had a gap close for Angus Energy. That was related to the 0.95 level. And then we broke the initial March resistance at 1.13. That's, I suppose, now the obvious stop loss for the bulls as they chase a target towards 2.2 pence, which is the top of a 2021 broadening triangle. Time frame on 2.2 pence maybe by the end of next month, if we are lucky. Moving along to Avacta, which is looking rather better than it has done for a while. The reason for saying that is that we've broken that line of resistance from December. That was around the 52 pence level. We've also broken the 50-day moving average at 60 pence, and an end-of-day close above the 50-day line could take the shares up towards, basically back to £1, because there's not really anything between the 50-day line and £1. So maybe better news there for fans of Avacta, who've taken a bit of a punch over the recent past. Only back below 52 pence, really delaying the recovery scenario. We've also got that uptrend line, bullish divergence line once again, which I suppose forecast the rally that we've got now. The move there after the sort of the fourth bounce off that line back at the beginning of this month. Moving on to a stock which is looking quite sprightly at the moment, Belliscura. Here was quite sort of relatively certain that the shares would bounce from the low 80s after the bounce in the RSI window. Again, another bullish divergence situation. We've got a rising 200-day moving average. Bounced off that yesterday and gapped higher through both March resistance, the initial March resistance at 108 and the 50-day moving average. Above 108, looking for up as high as £1.50, maybe by the end of April or going into the first half of May. But very strong signal there from Belliscura, especially after the double bear trap below the old November support area in the upper 80s. At this stage, really back below £1 and the floor of the gap, delaying the upside scenario. But it'd be surprising if there was even an end-of-day close back below the 50-day moving average. Moving on to Coro, which seems to be going from strength to strength. The gap higher today. We had that gap close buy signal at the beginning of the month, and hopefully a continuation gap now. We're targeting towards 0.5. We've been doing that for quite some time, a few weeks at least. A big target here above 0.5 is 0.7, which would be the top of a rising June 2021 price channel uptrend line in the RSI window as well, should hopefully accelerate the gains that we've been seeing. Very high grades from Empire Metals today, which is very much appreciated. We've got a gap off the lows and also through the 50-day moving average. That's also a bear trap from bear trap reversal, bear trap gap reversal from below the December 103 support. The view now is that at least while we're above the 1.2 pence level, looking for 2.1 pence at that December resistance line projection. Another situation here where the bullish divergence going into February predicted the turnaround in the stock. On to Galileo, where there's been further news today. Here we've broken that line of resistance from February, also broken above the 50-day moving average at 102. Looking for a retest of February resistance at 1.25 pence by the end of next month, and perhaps even sooner. Only back below 0.95, really delaying the upside scenario for Galileo over the near term. Big jump for Keras today, and I suppose it was on the cards after that sort of double, triple bounce of the in the RSI window, and also after the gap close signal. We had an end-of-day close back above the top of that February gap down earlier this month. The view now is that an end-of-day close above the 200-day moving average at 0.07 could take the shares up to 0.13 or 0.14 at the top of the post-June broadening triangle on the daily chart. Ideally, no price action really back below 0.05 ahead of any fresh moves to the upside. Obviously, wary that this could be a one-day wonder. Moving on to Oracle Power, where you can see that we had the unfilled gap to the upside off the lows. We've had an extended bullish divergence line as well, but obviously it's taken months for that to kick in. But the unfilled gap to the upside, bear trap as well, has sort of predicted the quite explosive move to the upside that we've seen. So a gap through the 50-day moving average. The view in now is that the longer we can stay above the floor of the gap at 0.37, the greater the chance of a move towards 0.55 or beyond. Only back below really 0.35, suggesting that this is just another flash in the pan for Oracle, but looking quite decent at the moment. On to Poolbeg, which has an American listing now on the cards. Here we've got a situation, we've got the higher low versus February. We had a gap close buy signal off the low, which was which sort of worked well as a turnaround signal. View now is that if we can break the initial March resistance around 6.77, then the shares could get back up to the 9 to 10 pence area, maybe over the next 4 to 6 weeks or the following 4 to 6 weeks. But everything about the key to breaking the downtrend is actually breaking that 6.7 pence plus resistance on Poolbeg. Moving along to stock, which I keep calling it pence rather than pounds, and if I call it pence, you know that I mean pounds. Here we broke with Polymetal the £2.19 area just at the beginning of the week. We've had gaps to the upside, or at least one gap to the upside yesterday. Good progress at the moment, and the view now is that the shares should have enough strength to fill the gap up to £6.97, which is also where the 50-day moving average is. Quite a big upside there, obviously, but upside value while we hold above yesterday's high at £3.50. So above £3.50, looking for around the £7 level over the next 2 to 4 weeks, and a situation which looks like it's turning around quite quickly. On to Quetzal, which I tweeted about yesterday with great gusto. Here we've got a situation where we've broken that line of resistance from January. We've got a bullish divergence line there as well, which has helped the latest turnaround. And we also had a brief 2-day bear trap below the December support at 3.36. So all of that adding up to something which should power the shares up towards the 6 to 7 pence zone. That resistance line there from September heading for 7 pence, and maybe we see 7 pence as soon as the end of next month. Upside value, at least while we hold above the 3.5 pence area. Another stock which is gapping up at the moment is Thor. Obviously not the most liquid situation in town, but we had a bear trap gap reversal that was back in January. Island top, and then we've actually now got an island reversal as well. A positive one through the 200-day moving average. The longer we stay above the 200-day line at 0.75, the greater the chance of a 1 to 2 month target as high as 1.15 for Thor Mining, based on the rising trend channel and also the bullish divergence line once again in the RSI window. So that's looking quite healthy at the moment, over and above the rising 50-day line, which should also be taken as a decent signal. Just squeezing one more stock into this. Saw this on Twitter. One or two very knowledgeable Twitterati talking about the situation. Think Smart. Here we've had interesting turnaround. The main plus point here, though, is the two plus points actually. One is the bear trap below the February support, a narrow bear trap at the beginning of this month, so that was below 27 pence. And the next highlight here, the unfilled gap to the upside. The shares did try and fill that gap down to 31 pence, but failed, which is great. and that suggests that we're actually in a rising trend channel, with the top of the channel from back in January heading towards 70 pence. That could be hit as soon as the end of May. And the other plus point is that we've had decent support for the shares at 37 pence, which is the former neckline resistance. So above 37, looking for 70 on Think Smart. That's it from me today. More updates tomorrow.